Welcome everyone. Welcome to another episode of Wealth Talk. So last week we introduced the concept of Wealth Talk and what kind of topics we cover in these weekly sessions. So with that context being laid, why don't we get into the session directly? The latest update that we have today is the falling rupee versus the dollar, where now we are trading at 82.33 versus the dollar. So Mr. Prasad, do you think the rupee has scope to fall further more than these levels?
The international markets, the currency fluctuations are something very difficult to predict by anyone. But at the same time, what caused this or what precipitated such a steep fall in such a short time also needs to be understood. Before we go into the rupee dollar parity, we have to understand rupee has been doing extremely well compared to other currencies vis-a-vis dollar. So should we take the comfort that we are doing well better than other currencies, or should we really keep worrying that we are falling when compared to the dollar? The reason what actually contributed to this kind of fall today is not exactly because of macro changes at the economy level, because India has been hoping that rupee will be and the bonds of Indian rupees will be included in the emerging market index. If that were to follow, if that were to happen, most of the money that is floating around the whole world from the HNIs and from the institutions would have found its way to the India, and which would have stabilized the rupee further. But unfortunately, JP Morgan has deferred the decision to include the kind of rupee bonds into the emerging market index. That's what actually has given unnerved people, and bonds also have really started sliding further down. So with this kind of today's fall is not exactly attributable to economic changes or kind of macroeconomic changes at the India level. So I don't expect rupee to fall further steeply because nothing has changed except that a crude has probably stepped up a little bit and it is trading around $90, around $92, $93 now. So, but for that, if the crude continues to surge beyond 100 and then the current account deficit of India also widens, then there may be a worry that rupee may fall further. Otherwise, it will find its roots very fast, and according to me, it will regain the strength also in the coming days. So I don't expect rupee to really suffer too badly. At the same time, all the people who mostly youngsters, new millennials, have been found to be trading in forex aggressively because when the markets are stable, it is easy to make money by writing options and then doing in the derivatives trading. Many people have gotten into this habit, and then there are so many shocks in the market who are luring these youngsters to get into the forex trading. If you get into a market without knowing the basics, without understanding the nuances of that, and if you are not capable of understanding or analyzing a balance sheet of a company in India, how can you expect yourself to be empowered to take a decision or take a calculated decision on the whole economy of the world or US and the whole economy of India, and then compare both of them and then try to decide the parity? Many people, I can say 99.999% of the people, don't even give a thought to this. They just want to be involved in the forex trading, and then they are normally led by the people who actually lay a trap for them. So my sincere suggestion to everybody, whoever is investing in forex trading without understanding the basis, without actual need of forex for their business, should stay away from that and do not get involved into the speculative trading.
Right, Mr. Prasad. So coming into this week, we've seen the Nifty kind of correct, or rather not correct, but do an upward swing of more than 3%. So many investors also have this in their mind. Like, is this kind of a sustainable upward momentum is one point. On the other hand, the World Bank has come in recently and has kind of reduced its growth forecast for India by a whole percentage point from around the 7.4 percentage level to around 6.5. So there's two contradicting news, rather informations that are out there for an investor. So main concern or main question that an investor may have is this: if this upward momentum is sustainable. So what do you say about that?
And everyone has to understand and appreciate the fact that the newspaper or media news will have a shorter span of lifetime to play out in the market. For example, even if the worst news, once it is released, there will be knee-jerk reaction and the market will tend to go down or up based on the positivity or negativity of the news. But in the long term, that is beyond a week, none of this news will have a lasting impact on the market or its direction. So what actually leaves a lasting impression or kind of lasting effect on the markets are actually the fundamental performance of the companies on which the prices are supposed to be based on. In that context, we have to understand that when June 15, advanced tax estimates were released and the collection figures were released by the government, Indian government proudly announced that there was an upward collection of 40% over the previous year. That means that profits have gone up for the corporate sector, or at least at that point of time, the corporates were expecting their profits to surge by a minimum of 40% than the previous year. So that is a good sign. So that will help you to understand or base your judgment saying that the economy is going to do well and Indian corporate sector is going to do well. And to add further strength to that, when the government started issuing refunds left and right to all the people who filed the returns in the last year, all the refunds have been issued. Despite that, after giving a huge refunds to all the SSAs, still September 15 advance tax numbers have spoken very widely, very loudly that 30% is the extra advance tax collected for the current year, which implies that the profits are sustaining even in September quarter, not just in June quarter, but also in September quarter. Now we are already into October. The results are just due around the corner. When the results are announced, there are likelihood of positive surprises to be more in number than the negative surprises. So obviously, if you ask me, can this be sustained? Can this rally, if I cannot say rally, can this run up be sustained? Yes, it should be sustained based on the performance of the corporate sector. Another thing that adds to the argument is the credit offtake has been highest in the last 16 years. So the credit offtake going up means the revival of the strength or confidence in the underlying economy. When markets are flooded with offer, when corporate sector is given an incentive called PLI by the central government, most of the people came forward and started investing heavily into the capital goods sector, capital equipment. That actually shows the revival of the economy in any country, not just in India. So because when the capital investment is starting to happen in private sector, the credit demand will go up, credit offtake also will go up. So all these things put together, credit offtake is good, the tax collections are robust, and corporate sector results are going to be solid. So there is no reason for any one of us to be worried because just because 18,600 was the highest peak touched sometime in the last year, can it be reached? According to me, it can be reached in the next 12 months. So people should have a lot of faith in the market and people should definitely stay invested.
Right, Mr. Prasad. So thank you for that. So we also informed our investors or our viewers in the last video that we perform a service where we kind of look into their holdings or their eCAS statements and provide a consolidated view on kind of what to do with your portfolio, what are the good stocks in your portfolio, what are the weak ones, and on what basis we call a particular stock as weak, strong, or whatever it may be. We also identify a process on how your portfolio would have done had you followed some kind of process based decision making. So many people have kind of reached out to us and have continued to reaching out to us, but maybe we should give them a little bit of a peek into what this report may contain specifically for equities for now and maybe mutual funds for later, so that investors and viewers can have a better idea about this report. With that being said, I will turn it on to Mr. Prasad Garu, who can kind of give a brief about this report.
That's correct, Ashwin. Last time we indicated that the service that we are providing free of cost to the investors across the country is like this. Many times, whenever you watch the TV, live TV channels, people start calling them and then ask the analysts about a specific stock and their view and their likely positioning of the stock. So what they fail to capture is they have at least 20, 30, 50 stocks in their portfolio. But because they get only a 1 minute or half a minute window to talk to an analyst and seek out a solution or seek out a suggestion, they normally end up asking only one company out of their 20 or 30 or 50 stocks or sometimes even 100 stocks portfolio. Will that really help them to really build up a good portfolio? Very rarely it helps them to build up a good portfolio just by asking view on one opinion or one stock. Even for that, the person who is giving an opinion should be equipped to handle that company at that point of time with all the information. So, which is kind of a rarity. So, to avoid this kind of confusion and lack of information that hurting the investors, what we try to do now in this eCAS service is people, whoever is investing in equities, are mandatorily determined by the SEBI to be sent a kind of statement called consolidated account statement. Sometimes it is called eCAS, electronic consolidated account statement, listing out all the holdings held by them across all the demat accounts in the country. That means even if you have 3, 4 accounts with different brokers, still when the consolidated account statement comes into your email box, you will understand that all the holdings are given at the end of the previous month. So if you share that kind of portfolio eCAS statement to us and also send a PAN number and phone number to us, that will help us to process the entire eCAS statement and come up with a report, something like this, which I'm going to share it on the screen. The first and foremost thing, component of the report is this. We will dissect the entire portfolio and try to understand what are the companies that are actually trading at fair price or more than the fair price. They all are marked in red color. For example, in this portfolio, the first company is marked as hell because the target price is given as fair price is given as 9.33 and the current price is 12.55. So obviously, it is already overpriced. According to us, it should be immediately sold by the client. And then there are some companies which are marked as switch, which means the profits are not growing enough to support the argument of holding on to a share. These can be switched to a better stock. That's what the blue color indicates. And some of the client stocks may be, some of the investor stocks may be strong enough on their own right, and they may be continued to be held on. That is, they are marked as hold. So that means when the market price is 17.85, and the fair price is around 22.5, it has still scope to grow up. So we will size them to hold. So in one shot, they will be able to find out the stocks that are supposed to be sold immediately and supposed to be considered for switching from this stock to other stock, and also the stocks that can be held on. And also, first time in India, unlike any other broker or any other service in the country, we are also coming up with a solution where we give the portfolio level earnings, not the company wise earnings or EPS. We will multiply each and every stock in the whole held by him in the portfolio with the earnings for that last trailing 12 months and then arrive at the earnings and then sum it up. If you look at this client's portfolio, he was earning 72,000 rupees on his portfolio 2 quarters before, and previous quarter it fell down to 34,292, and in the current quarter it has only gone up to 35,353, which means it is very small rise. So portfolio earnings, he will be able to understand whether his portfolio is on the right track or not. And then we also tell him what is the portfolio PE ratio. This is again unique only with Vivekam because nobody else in the country is offering at this point of time as of now. And portfolio PE ratio for this client stood at 61.67, whereas index is trading at 20.43 based on trailing 12 months, which means the further growth is going to be very difficult with the same portfolio. And we also tell the clients and investors that if you follow a process, you should only buy the companies that are trading much below the fair price, and you should only buy the stocks that are growing in the operations. Once you do that, that is what we call it as a process. Once you buy the stocks, if it reaches the fair price, exit that stock and use the money to buy the low price stocks and the growing stocks on that day. That's the cycle. Once you follow the process, you will be able to make more money. And in this client, as you can see from the fourth point, he has lost out an opportunity of 28.7% per year. That is from 2019. So what we do in this process is we take the portfolio back in time and then imagine as though he started following the processes from that 2019, and if he had continued the process religiously, how much money he could have made. It clearly tells him he could have made about 18,85,386. So that will also be represented as a graph. In this graph, you can see the portfolio journey has been like this, and whereas if we had followed the process, this should have gone up like this. To quantify that, we also gave him how much was the portfolio beginning value, 12,69,000. It has become 21,57,000 or 52,000, giving him a compounded annual growth rate of 19.25%, which sounds very, very strong. But if we had followed the processes, the same 12,69,000 should have become 40,37,000. That means he lost out 18 lakhs by not following the process. This will be given to them free of cost so that you don't need to ask an analyst about what particular stock in your portfolio. You can take the view on the entire portfolio by sending it free of cost and then getting the service report also sent to you. Why we require eCAS statement is eCAS statement will give the correct values and PAN number is required to open the eCAS statement and phone number is to help our team to reach you out and explain the contents and then help you draw the right inference from each and every content of the report. That is why we want them and this is being given to free of cost. And we also are going to come up with mutual fund report sometime later, probably next week or following week. As you said, we will cover it a little later.
Right, Mr. Prasad, just for our viewers, we have received very good volume of these reports or these holdings sent by the clients, close to around 3,500 to 3,800 of these requests, and we have been successfully able to process almost all of them already, which gives you a testament on how we are able to scale. And I'm sure you can take use of this service. No, it is all free, and we don't want you to become a client or anything of Vivekam. We want people to be more aware and more literate about their financial decision making. That is why we are kind of taking up this undertaking. With that being said, let us also get into some stock specific questions for the week. What is on everyone's mind and on everyone's lips right now is about 5G related stocks. As an investor, if I am thinking about it, I may think in these lines. There is a 5G auction going, and 5G auction has been done. There are many companies that are going to roll out their 5G offerings soon. So there is a huge scope for expanded growth. So is there one or two stocks that I can identify that can be kind of a multi-bagger that is backing on 5G becoming a grand success? So that is mainly the point I think that many investors have in their mind. So Mr. Prasad, what do you say if someone poses such a question to you?
No, 5G sector is a revolutionary without any doubt. And the Prime Minister has already launched the services on 5th of October. So now there is a lot of buzz going on in the market. But as you know, no news will come packed and delivered only to that investor on that day for him to benefit. The news that reaches the investor, retail investor normally is the last leg. That means, several people in the country have already known this much before an investor knows. But unfortunately, most of the investors' minds are programmed in such a way that as though the information has hit him or come to him for the first time, he wants to have a knee jerk reaction. That should be avoided at all costs because our money is going to be at stake based on the news that has reached us last. So you cannot expect yourself to be benefited hugely just because of a newspaper reports. Now coming to this, because 5G is completely limited to the telecom industry, and to mobile telephony. And once you understand that there are three major players in this country apart from BSNL, which is not a kind of preferred choice for many investors for several reasons. That is Vodafone, which is deeply in debt and also has a lot of huge equity to service. And next is Bharti Airtel, which is a predominantly a strong market player, and Reliance Jio. But Reliance Jio is also a part of the whole of Reliance, where petrochemicals, retails, and everything is there. So is it a pure telecom player? No. So the benefit of a 5G, even if it accrues to Reliance, can it be significantly large for this company? Again, it's very doubtful. So Reliance is, though it is a beneficiary, we cannot judge Reliance. But when we look at the Bharti Airtel, we clearly see, based on June results, without discounting any further prospects on the upside because of 5G rollout, still the market price is at around 790 or 800 rupees now, whereas the fair price determined by our processes, which has been tested for generations, almost like for the last 2 decades, we were able to predict the price ranges for the stocks, particularly large cap stocks, with very, very effective percentages of more than 90% accuracy. Based on that, we have given a fair value of around 900 for the Bharti Airtel. That means as of now, even without 5G, there is a scope of around 12.5% or 15% upside from the current price. Now, with the 5G rollout, and both of the Reliance and then Bharti Airtel rolling out the services already, there's a huge potential. So I think in these three major players, I would vote for Bharti Airtel, then Reliance, and then Vodafone. I know many investors get tempted to get into the Vodafone because of the low price of the stock. Please understand the low price is because of a reason. It is not because of by chance. It is because of a reason. Very huge equity of debt being converted into equity. That is why it is going at a cheap price. 10 rupees or 15 rupees price does not mean that it has got huge potential to go up and catch up to 700 rupees. That is not going to happen. So please be advised, in these three stocks, Bharti Airtel should be our choice. And coming to the other players, there has been fringe benefits. Many people keep talking about the other players in the telecom industry who may probably do better. Some people have started asking us already about companies like Tejas Network. Unfortunately, what happened is the news, which is already discounted in the market, has pushed this price of the company to astronomical levels. Whereas our fair price is at 381, the market price is already 707 rupees. So, which means it clearly is a good stock, has got the potential to go up. Everything is true. But has it got the capacity to rise further in the price? It is already overpriced. So, getting into the stock at this point of time is kind of, very, very risky proposition for any retail investors. So, my suggestion is to stay away from that. And then next stock people talk about is Indus Towers. 5G rollout has come. The demand for towers will go up. The tower aggregation also has happened in the country. So Indus Towers is a good. Is it a good company? It used to enjoy a margin of 40% in 2020 September. From there, it started falling down, and latest quarter, June results indicate that they were earning a margin of only 19%, which means that margin contraction has happened in this company. So now, looking at a fair price of around 208 rupees, current market price is 200. That means why should you buy this company just because of likely prospects coming to this company for 4% gain? The current market price is only 4% away from the fair price. So this is also a company which should be clearly avoided according to us. And then people talk about ITI and people also talk about HFCL. ITI is trading at 108 rupees. According to us, after discounting all the prospects, the fair price is at 117. So still only around 8-9% upward chance are there. So it is also avoidable. And another stock what we are talking is HFCL. And they say it is a long-term player. It is a long-term player. The prospects are good, fundamentals are good. It's a good company. But is it a worthy company to buy? No. For the reason the fair price is 87, it is already trading at around 80 rupees. So for 7 rupees, I don't think investors should go into this kind of sector. So 5G fringe players, apart from the main player like Bharti Airtel, other companies do not offer much scope to grow. So people should be very aware that they may not be able to gain because of the 5G network in their investments unless they are careful.
Right. Thank you, Mr. Prasad. So once again, I want to request the investors and the viewers continue to send your holdings or your eCAS statements, whether it is in an Excel or the actual eCAS file itself, the PDF file, to holdings@vivekam.co.in, and our team will be able to get you a report within 2 to 3 days, and you'll be able to make much use of the kind of inferences that we can take up. Thank you, Mr. Prasad, and thank you everyone for watching.